See, I love Graham, but in this video, he is dead wrong. Now, before I dive into why he's wrong and my take on things, I just want you to understand I love Graham. I've learned so many things from him. I mean, the amount of expertise that he's given me when it comes to investing is bar none. So just please continue to watch him. Graham, I love you, but you are dead wrong with this, my friend. All right, so we are going to start the reaction video, so here we go.
It's no surprise why the housing market rose in price so quickly to begin with, and the first reason is low interest rates. For example, go and get a $300,000 mortgage at a 4% interest rate, and your payment is going to be $1,432 a month. But if interest rates then drop to 3%, and all that excess demand pushes the price of the home to $340,000, well, congratulations, you just played yourself, because now with an even bigger mortgage, your payment is still the exact same thing. The second, you also have...
I mean, listen, you also get to buy the same asset for the same price, so I mean, there's not exactly too much downside
the market for sale. All right, so here's what's happening today. CNBC now reports that in June, new listings have increased 5.5% year over year and 10.9% month over month compared with May, which means...
All right, I'm going to pause this for a second, just because I want you to understand something. Most of journalism, call it news sites, call it whatever the heck you want to call it, the media, they have a one-sided lens. Very, very, very one-sided to get ratings. That's all they care about. So when they look at an article, or they're drafting up something, or they look at other information, and they want to draft up something that is going to be eye-catching, because that's what they need, because it's of ratings, they need to get your attention. They're going to focus on very, very small bits of data, which sometimes is extremely skewed. The 5.5 months worth of inventory or whatever, or percentage year over year, if you looked at March or April, yeah, like the numbers are ridiculous because nobody listed their freaking house last year. Obviously, the numbers are ridiculous, but it doesn't mean overall the market is like freaking 17% up. If you're looking at very specific pieces of data, yeah, it can sound crazy, obviously, but it doesn't mean that everything all of a sudden is going to be this huge freaking problem. So when you're listening or watching or reading something, most of the time there's a very specific lens or a point that they're trying to take across that's going to try to hook you into the details, you know?
Means there's now more inventory coming on the market for buyers to choose from, and that's a relief for the entire housing market. However, even though it is an improvement, housing prices are still up 12.7% nationally compared to a year ago. Inventory is also still down 43% since June of last year, and nationally, the typical home is only on the market for 37 days compared with 72 days during the same time in 2020. And even though...
Again, like a lot of this data is from very specific points, very specific months, so it's like, you understand, it's very skewed information, because like, again, these are national averages also, so just understand that. This is not what I'm trying to disagree with here, but I'm just making a point that a lot of this data is very, very specific.
Well, on a broad scale, in terms of the market going down in price, there's actually some good news if you're in the market to buy something. That's because first, pending home sales increased 8%, leading economists to believe that maybe housing prices are going to start to come back down. Analysts say that in order to get a good idea of where home prices are going, you need to take a look at mortgage applications because future sales are a direct result of how many people are out there currently applying for a new loan. And just recently, mortgage applications have fallen to the lowest level in a year, indicating that first-time home buyers are getting squeezed.
Okay, understand. First time in a year, this is still accurate information, they have been astronomically high for like the last year. So it's still very, very, very high for normal circumstances if you're looking years ago. So just understand it's not like a crazy fall off.
Due to a lack of entry-level homes for sale. Now, real estate may continue to be very competitive throughout the next year or two, at least until interest rates start to have an impact on the market.
And they're not going to go up crazy
the mortgage
numbers.
giants Fannie Mae and Freddie Mac forecast that housing prices will rise 8% in 2021 before slowing down to 2.9% in 2022. Zillow is a little bit more ambitious when it comes to this, believing that housing prices could rise another 14.9% year over year.
I don't know about that
never
next
thought I would say something like this, but because materials are beginning to come down in price, builders are purposely slowing down their projects in order to wait for the materials to decline. It's also said that at the current pace, the number of houses on the market nationwide won't reach normal levels for about 14 months.
Okay, let me pause here for another second. Because in 2007, before the housing market crashed, we had over 3.5 million homes on the market. It was a saturated market. There was a lot of homes on the market, okay? And what ends up happening is you have a very saturated market, a lot of homes on the market, and not enough demand. Obviously, that's when prices cool off. There's an extremely high supply and not enough demand. That's why the prices will lower. Right now, there's 1 million homes in the market. That is a fraction of the amount of houses that are on the market in 2007, right? You got 3.5 million from 2007, I think it was like 3.7 before, and now it's like 1,050,000. Do you understand the difference of that? There's under a third of the housing supply currently on the market, and there's still crazy demand. We will not see, he says here, the current pace that we're going to be back to normal in 14 months. Do you understand how many houses would have to be listed and not sold in the next 14 months for us to get back to normality? It's impossible. Impossible. This is why the market's going to continue to push. And don't get me wrong, do I think we're going to have continuous, 12, 13, 14-ish% appreciation per year? No, I do not believe that. That's not what current economists that I follow show. By the way, you need to watch a video. Barry Habib, incredible economist. He's also a good friend. I mean, he's just such an incredibly smart man when it comes to this information. He has a company that's focused on this kind of stuff. You can check out his videos. He was just on Patrick Bet-David's podcast. Check him out. He talks about this stuff. You got to dive into it, but this is just freaking impossible to come back to a normality that fast.
So I know all of this is confusing, and you just want to know, is the market going up or is the market going down? Well, fundamentally, there's really nothing out there that screams that the market is going to come crashing down. So for everyone who's waiting for a crash to happen, it would probably have to take a black swan event that no one could predict that would collapse housing values. Like back in 2008, the housing market was completely shattered by over-leveraged borrowers who could not sustain their housing payments and were given more than they could handle by banks who wanted to package up all these loans and sell them to investors who were hungry for cash. Today, though, buyers are extremely qualified. They're putting down a lot of money. They're locking in historically low interest rates, and most importantly, they can afford the monthly payment. That's going to prevent us from seeing a wave of foreclosures like some of these articles say. However, there certainly is some concern about the end of mortgage forbearance, potentially dropping tens of thousands of homes on the market, all at the exact same time.
And just realize with the mortgage forbearance stuff, it's not like it's just going to flood the market. Most of these people are going to do a loan modification. They're going to be able to pay again. I mean, a lot of the people can't afford to pay. I mean, think about it. The amount of homes that are in true forbearance, right, or actually delayed on their mortgage is nowhere near what people think there are. I mean, like, there's realistically, I think it was only like maybe 2% of homes that are really going to be in some type of financial trouble. And in normal circumstances in normal years, 1.5% are normally in bad circumstances. So, like, we're 0.5% ahead of that. I mean, realistic, if you just take a second to think about it, we're not really in any sort of trouble right now.
The amount of homeowners currently in forbearance has been steadily declining month after month, suggesting that the majority of homeowners are beginning to resume their payments as normal. And for any homeowners who cannot make their payment, most likely they would be able to list their homes on the market and sell it for a profit and then walk away with the excess cash. In order for a home to really go into foreclosure, the buyer has to owe more money to the bank than what the home is actually worth. Only 2% of all mortgage properties fall in that category.
Exactly.
That's it. So the chances of all of them foreclosing all at the exact same time is pretty much not going to happen.
Exactly.
Instead, realistically, I think the biggest risk to housing prices is likely going to be rising interest rates, which is said to happen in about 24 months. To me, I just don't see anything pointing to a crash, but I do see a lot of things that I believe will start to normalize housing prices, and that I think is a good thing. Plus, if I were to guess, rental prices would probably be the next thing to start going up.
All right, so another couple quick points, right? And I know he's going to talk about this even more. So again, I agree with a lot of his points, but just understand, like, for the housing market to really make any sort of drastic change, and I really don't think there's going to be a quote-unquote normality of what was before. There is going to be a new normality, right? Until like interest rates hit, call it 5.5%, 6%. I mean, like, which is still historically low, right? Until that actually happens, we're not going to see any sort of crazy difference. And like you said, a black swan event would really be the only thing that really crashes the housing market or bottoms it out. It's just not going to happen. And now he's talking about rental prices. Yes, as an investor myself, right, I currently own 10 apartments. I mean, like, for somebody like myself, who also is an investor like Graham, yes, I'm incredibly happy that rental prices are going to keep going up. Thank God. I mean, like, I'm excited that that's going to keep happening. People like Grant Cardone talk about it. One of the only things that's really a continuous increase over time is rental prices. Rental prices will continue to grow over time. Things that you can be doing to hedge your bets against this kind of stuff: own property. Own property. If you don't own property, right, you're not going to see the benefits of all these amazing things that are going on. And yes, like, everyone keeps asking me, is this the right time to buy a house? Yes. If you listen to Barry Habib, he was even talking about, like, in 25 to 30 months, whatever you overpay for on a house, I think he was using the term of, like, call it 8 or 10%. You're going to see that money back in 25 to 30 months. Because the interest rates are a little bit low, you're going to be able to, afford a little bit higher of a home. So if you bid a little bit higher, you pay a little bit more than asking price, it's really not that big of a deal. Now, if you're looking to buy flip properties and you're just hoping for the appreciation on it, don't get me wrong, you're gonna do okay, but realize you need to still be buying these properties at a great price. When I buy rental properties, I still have to buy these deals at a great price. You can't just buy property because, oh, it's gonna go up, you know, like in 2005 where you could buy a house and a year later you're selling for $100,000 more. Don't get me wrong, I have a close friend of mine who's about to do the exact same thing I just said, but that's not a normality and that's not going to continuously happen. One thing I am looking at though is that deals that are great prices, I'm looking at holding a lot more stuff and playing also an equity play on top of the fact that I'm just getting a great deal in general. I want to hold a lot more property right now. I don't want to sell it. Unless you're getting an unbelievably great deal for a flip, this could be a good time to maximize a profit margin, but I'm willing to pay a little bit more money for a rental right now because I do plan on holding it for 20, 30 years. I'm a big fan of owning property. The property that I also live in right now, I own it, right? And I will lease it back to myself, right? I lease it back to myself and I pay rent to myself. It's the smartest way to buy property. And again, you got to do it the right way. I'm not, talk to your accountant about these things, but listen, especially if you're getting to an FHA loan, there's, regulations you got to pay attention to. So you got to buy it and do it the right way. I'm not trying to tell you to be stupid and just try to lease your property to yourself. It doesn't make sense. If you do it the right way, it can make a lot of sense. But just be careful. Again, if you're about to get into a lease, you need to make sure you're not, you realize that over time, that is probably going to go up, which is why I tell you buy investment property. Go out and buy a duplex. You can do a 3.5% down mortgage, FHA, 3.5% down. You can get into a duplex, right? A 2-family house or a 3-family, or I bought 4 families with FHA loans, right? You buy them and you can rent out the rest, and you eventually will have an investment property that will pay you for the rest of your life. It's time to be really freaking smart instead of being like the rest of the people that continuously pay rent and make landlords rich. It's time to take your life by your hands, take some freaking ownership here, right? And go out and really just do something for your future, because right now these markets are beautiful times to accumulate wealth. Look at the stock market, it's been blowing up. The real estate market's been blowing up. And for everybody who's in it, is making a lot of money. And for those of you who are outside of it, you're getting killed. If you are not invested in the market, which the market just went up, I don't know, last year I think it was like, almost 100% across the board. 70, 80, 100% depending on the sector that you were really in, sometimes more, sometimes a little less. If you're not in if you're not in the stock market or the real estate market that appreciated by 13% or other homes that appreciated a little bit more, you are losing money by having money in the bank, right? The bank gives you 0.25%. I mean, if that, just understand you are losing so much freaking money by not having your money invested. So anyways, guys, listen, I love Graham to death, but I just think that there's a couple points here that he was absolutely wrong about. There's no bottom coming, absolutely not. I think there's no normality coming. This is a brand new normality. We're gonna have a new normal, right? Whatever happened in the past happened in the past, right? I love you guys. Comment down below. I want to hear your take. Tell me about your thoughts about what's going to happen in the housing market, the stock market, and I will see you in the next video. Take care.